and we burst through it. And by the time it burst through it at about $19, within literally weeks, it was nearly 30.
Yeah, that's interesting because I've heard you mention in other interviews that your quarterly momentum chart for silver, it is your favorite right now. So let's go ahead and start with that. What are your charts showing you about silver right now?
Well, let's go back a bit. Let's go back to 2019, 18, 17. Silver was in the doldrums, depressed, underperforming gold, very low price levels, up and down, but not able to get out of the hole. Okay. Just before it took off, it had that last plunge in March of 2020, dropped you down to about $11. And it turned and burned like a rocket because when we ran annual momentum of silver back then, we saw a different picture than we saw on the price chart. We saw a massive ceiling, a flat ceiling above. It wasn't quite so clear on silver. And we burst through it, and by the time it burst through it at about $19, within literally weeks, it was nearly 30. So, it went from the teens to 30 in a matter of a couple months, actually. And it did it because it broke out of a massive annual momentum base. And since then, now this would be the mid-2020 time period. Silver ran up, got to near 30, and then it leveled off into a range, a boring range, basically from just below 22 up to 30, back to 22, up to, et cetera. And then over the last, since especially this summer, which is when the Fed came out and said, we're going to taper. We're going to get tough. Okay, right. And everybody believed them. Okay, fine. Well, maybe it's true. But if you look at gold and silver, they got bashed, and they got bashed, and they got bashed all during that time period. But each of the sell-offs were redundant. Meaning, yeah, you'd beat it up, gold would go down, silver would go down, then they come back up again. About the way you sold it. Then they go down again. They come back. You couldn't get a sustained downside going, despite multiple selling episodes from mid-June last year through late last year. Silver has repeatedly come back down to the $22 level on price, nipped it out a bit. We thought, frankly, that maybe it would go down and hit 21 just to clear the decks, if you know what I mean. Because there's so many lows that occurred at around 22, going back to summer of 2020, that maybe we needed to flush it out, run the stops. But they wouldn't go to 22. They went to 21.50, okay? And now you're back up to 24. Well, over the time that silver's been doing this up-down with sort of a slight downward staircase, and not really, on the price charts, you don't really get a good trend structure to define where, there's a trend line. You can say, oh boy, there's a structure. If we can get above it, we're going to take off. But when you look at quarterly momentum, annual momentum gave you the original buy in 2020. Then you've been oscillating above that level since. But quarterly momentum is when you measure price, in this case weekly bars, in their relationship to a 3-quarter moving average, which only changes once every quarter. You adjust it, okay? It's similar in duration to a 200-day average, okay? Anyway, we plot that, and we ended up with the chart, and you can show your viewers later, an oscillator that continues to come up to the same level at the zero line, in other words, from below, the momentum readings. What that means is the price of silver has repeatedly come up and hit the 3-quarter moving average from below, and been unable to close a week out above it ever since breaking below it late last summer. And it's done it now 3 times since it broke below it last summer. It's bumped the zero line 3 times, so you have a perfect horizontal structure that you cannot see on a price chart. So we have what we call a beautiful ceiling, a pending breakout structure. Normally, when momentum establishes something so clear as that you just glance at it and you can see it. It does it for a purpose. It's building a structure as an escape valve. Well, we ran up, the number for this quarter is in the mid $24 range to close a week out, $24.44 to be precise. January ran up to that same number, but closed the week out about 10 cents below it. Couldn't close the week out in the January rally above the zero line. Dropped back down under 22. We're back up at 24 again. So right now, this current rally in silver is trying to blow through this structure. When silver clears that momentum structure, it is very clear, very wide. It's a big base. Our bet is that silver price will, like a vacuum, rally up to the top end of the range of the last few years. There's a zone up there on the price charts. You can see it. Peak weekly closes a couple times have been around 28. Peak weekly highs have been around 30. So there's a little zone up there, $2 zone, where the highest and the weekly closing highs have been. We think if you cross our quarterly trend number, silver's going to rapidly move to the top end of that range. And we've warned our subscribers, if you want to sell it there, go ahead, but you'll be skewered. Okay? Because we think if you go back to those highs, you're going through. It may pause there. Silver is overdue to regain value versus gold. We all know it's got squished after the 2011 peak. Its relative performance dropped. But when we measure relative performance of silver versus gold and run momentum studies of it, we see that silver is broken out versus gold. It's now in a positive performance trend versus gold. And we think that is a further wind at the back of silver, such that when it closes over that three-quarter average on the net momentum charts, it's got the wind at its back of being a better performer than gold now. You have to measure it. You can't glance at the price charts to see that relative performance, by the way. And if you cross that quarterly momentum structure, we think silver's going to come to life. And I don't exaggerate, but it wouldn't shock me if silver behaved much like Bitcoin did a year or so ago when it went from 10,000 to 60,000 in about 9 months. I think that we could expect that kind of behavior from silver.
Okay, we'll touch on a bunch of those things that you just said in a bit. Being that silver seems to be sticking on the lower end of that 22 to 28, $30 range, the 22, 23, 24 level, would it get pulled down to the sub 20 level versus a breakout of above 28 in the short term?
We thought there was a possibility of that during this quarter. In fact, there was a point at which gold, which already did some positives on its quarterly momentum in the fourth quarter of last year, but when gold did it, silver didn't agree. It didn't cross its structure. So we said, okay, hold on. We want silver to say, yes, I'm with you, gold. And it didn't. And sure enough, what happened to gold? Gold dropped from the high 1800s down into the 1700s again. It pulled back. And silver is still poised below its breakout structure. We want to see silver cross its structure because gold is already positioned positively to go. We want silver to echo that. There was a point at which, in that pullback from the November high in gold, we saw some vulnerability on gold monthly oscillators that suggested you could get a downside flush. In other words, if we're going to get one, the door was open for the bears to do it. They didn't do it. 2 weeks after we put up our caution flag, we said, okay, caution flag is waved down. The chance to break the market is gone. And sure enough, then gold firmed back up. So did silver from below 22 up to over 24 recently. So we think that opportunity that you talked about, yeah, it was possible. But I think that opportunity opened and closed, and they didn't exploit it. So the bears had all their fundamental argument, the Fed's going to do this and all that stuff. And yet now, they're not making any money. No, silver hasn't exploded yet, but they're not making any money on the short side.
Yeah, that silver slingshot. A lot of guys would say that silver has been sort of an underperformer, especially when they look at something like Bitcoin. They kind of feel like silver needs to get up to that $30, $35 price point, and then perhaps we may see silver hit that slingshot, have that Bitcoin moment. Does it need to get to that number? What would take it?
Well, the price guys will get excited, obviously, if you go up above 30, because they can see the repeated highs in 2020 and early 21, where you got up to 28 to 30, 28 to 30, 28 to 30. So what we're saying is if you cross our quarterly momentum number in the mid-24s, you're likely to vault up to the top end of that stupid range. I call it stupid because anybody can see it, okay? It's not going to halt you again. You might pause there for a day or a week or whatever, but you're not going to get a major sell-off if you return to that upper end of that zone. You're going through. Then the question is, okay, where's next resistance? Well, there isn't any except $50 on a price chart basis I'm talking about. There were two peaks, history of silver at $50, $50. 2011 was the last time. So there's a void between 30 and 50 where there's really just nothing. There's no place to sell it. It's just an open window. And we argue if you ever see 50 again, you're going to get a triple top breakout. You know, so, but the key right now is to get silver over that quarterly momentum structure, and that's to say, half a buck above the high we've been trading at recently, and do it on a weekly close. Yeah.
Okay, yeah, because there's been a lot of guys in silver. They've been holding silver for quite some time. I hear them telling me if it ever gets back to 50, I'm going to sell it and let it go. What would you tell them?
They'll be sorry. They'll be sorry because we're in a historic move. You shouldn't just look at gold and silver anymore. You've got to look at, well, for instance, the U.S. stock market is in the biggest bubble that it's ever seen in its history. And, if that bubble breaks, and we think it's begun to break by our measurements, by our metrics, long-term metrics, if it begins to break, and I don't mean crash, because bear markets in the stock market rarely ever begin with crashes. Only in 29 did you start with a crash. Look at the 2000 top. Look at the 2007 top. They were arm wrestling matches. But if you now break that asset bubble, and going with it will be muni bonds and high yield corporate debt, which are behaving terribly. Okay, the Fed is going to panic. Those are the asset categories it defended in 2020 through 2021. They outright bought them. ETFs of high yield corporate debt, muni bond ETFs. If those start to break again, the Fed's going to have to come up with some excuse to cease to tighten and taper, because it's their primary job to fund government, support government bonds. And they've got a real problem with these asset categories breaking, even if you got the S&P just 20% off its high, which is we think where it's going to go in the next low. We're down around 3,800 S&P. That's only 20% off the high, but you can imagine what public sentiment, asset manager sentiment is going to be like. Because a lot of asset managers out there perceive, based on fundamentals, that this market is way overvalued, like they've never seen. Well, the Fed cannot allow that asset category to implode. And if they don't, there's only one alternative they have. That's to revert back to monetary expansion and free money. And what does that benefit? Gold, silver.